the bigger picture still holds. The market's pretty weak. There is that slight sort of downwards trend.
Kia ora, and welcome to the New Zealand Property Market Podcast, brought to you by Cotality for the 3rd of August 2026. I'm Head of Research at Goodall, and today I'm joined as per usual by Chief Economist Kelvin Davidson. Kelvin, we'll get into a bit of labour market chat later on, but first, our home value index for July went live over the weekend. How'd that release go, mate? A little bit different, having the data out there on a Saturday. I hope it didn't take up too much of your weekend, and what did the data tell us?
Yeah, no, there was no time commitment on Saturday, so that was okay.
Great.
To be fair, I wasn't actually watching the media inbox now that you mention it, so yeah, it might have been my own fault. But no, I spoke to a lot of journalists on Friday afternoon. It's the usual sort of radio and print journalists will ring during that embargo time. So yeah, decent interest. That whole thing of trying to spin it in an interesting way because the figures themselves were still relatively soft. I mean, yeah. Perhaps when you really take a look at the numbers, if anything, it had a slightly weaker tone. So perhaps that did generate some interest. But yeah, so we had a minus 0.3% fall over July in the national median value. So, sneaking lower. It was actually the fourth fall in a row. Now there is, there's maybe an element of kind of seasonality in there. We're into that sort of winter period. So, maybe it's not totally surprising. But I think the bigger picture still holds. The market's pretty weak. There is that slight sort of downwards trend, which is what you'd anticipate with listings still high, economic uncertainty still high, and interest rates maybe sneaking higher. We know the OCR's gone up already, of course, so I don't think all of the banks have reacted yet, but certainly a couple have. So there's probably no great surprises in there. Saw Christchurch and Dunedin sneaking higher. You wouldn't call it any sort of strong growth, but Christchurch was up 0.1, Dunedin up 0.2. So there's still that, I suppose, slight sort of north-south angle going on in here. We saw Auckland and Wellington falling again. So yeah, probably in some ways that's continuation of recent trends. And as I say, I think it just fits with what we're seeing in the economy. Still uncertainty there. What we're seeing with sort of mortgage rates. People just feeling still a little bit uncertain, and buyers have the pricing power. So of course you'd anticipate that if anything, the tone of house price figures would be a little bit soft. It's interesting. I listened to your podcast with the guys from Low Market and Dunedin last week, and we've been talking about investors, and part of the press release for the home value index was just saying first home buyers still enjoying conditions, investors a little bit cautious. So I was interested to hear their comment about starting to have conversations with investors around waiting for the election. People who might otherwise have been interested in looking at a house, taking out a mortgage, buying a rental property, now really seeing that election on the horizon and maybe just saying, what, I'll wait. So yeah, there's still buyers out there, first home buyers doing really well, but there are those stories coming through now of other buyers just holding off a little bit. So yeah, it's difficult to really see this turning around. Economic uncertainty is still out there. We've got that election coming up, buyers in the ascendancy. So it's just difficult to see too much change in the next little while. It feels as if things will just sort of tick sideways or even tick a little bit lower in the coming months too. So yeah, interesting release. Go check it out. It's on our website. So yeah, check it out.
Yeah, I'll make sure I leave a link to that in the show notes as well. But yeah, I think, plenty of coverage off the back of this or other, data out there as well. Talk about this being the longest downturn in 30 or 40 years. So I think that tone's definitely changed, and that's partly off the back of, as you say, just weakness here, 0.3% down in a month and 1% down in a quarter. It certainly sticks out as newsworthy, right? So I think there was a little bit more in there than maybe we anticipated and that we'd seen the previous months, and some of those revisions of previous months too, I think, have gone a little bit further down as well. So it's certainly, when you add a few months together, you're certainly seeing that downward trend become quite real, not so much just sideways anymore. But it is worth noting those ones that are kind of bucking the trend, right? Like Dunedin, Christchurch, as you mentioned, up slightly over the month and flat to slightly up over the quarter too. But on an annual basis, Christchurch is up 3.6%, Dunedin's up 3.3%. They certainly outliers compared to those North Island centres, though I did note Tauranga was still up 2.1% over the year. but the sort of quarterly and monthly figures had turned negative. So, most of that growth had happened, in the previous 6 to 9 months or whatever, and maybe starting to see values downturn in Tauranga. But yeah, like I say, off the back of the chat with Ryan and Ben from Loan Market Dunedin, Dunedin obviously sticking out there, but Invercargill, like incredible, 1.2% growth over the month, 1.7% over the quarter, 8.2% over the year. Now that is just nothing like anywhere else in the country, right? And I think you mentioned in the release there was sort of Invercargill and a few of those other small centres in the South Island that are hit new peaks. In Invercargill's case, $565,000, so still relatively affordable. But yeah, that stuff just, you can't help but see that as jumping out as interesting, right? And so I think that's also led a lot of the conversation since the release on the weekend. And I think, it's been a theme we've talked about for a long time, and I've seen bits and bobs of this around the place as well in terms of comparing North Island and South Island economies. And I'm not sure if you saw Satish Ranchhod, our friend from Westpac's post on LinkedIn last week, which looked slightly tongue-in-cheek at the population of cows per population or per capita or whatever compared to house prices, and found there was a correlation there. And obviously not saying that, just go and buy some cows and suddenly your house price is going to go up, but really just another way of reflecting the fact that the agriculture industry has been the strongest in the economy. And so, it's another reflection of that to show that, the parts of the country that have a stronger supporting of the agriculture industry have seen that flow through to increased house prices, because revenue for those types of organisations and businesses, and either directly or indirectly involved in agriculture, have done better, and that means consumers are out there more willing and able to purchase properties as well. So yeah, quite a good one, but again reflecting some of that division between the islands, I suppose, at a broad sense, but certainly seeing that strength in the Canterbury region and the Southland and Otago regions compared to those main centres in the North Island for sure, including Auckland and Wellington too. So yeah, another interesting way of looking at it, that's for sure.
Yep, definitely. Yeah. Definitely tongue-in-cheek from Satish there, and it's more of a correlation thing than a causation for sure. But it's interesting that, you referenced there Invercargill being in a new peak in terms of property values. There's only 3 other areas that are, in nominal terms at least, at a new peak. One of those is neighbouring Gore for Invercargill. So again, a farming area. It's got house prices at a new peak. Then you've got Mackenzie district and Hurunui. So farming / tourism, those industries, these are smaller districts, of course, but strong in either farming or tourism or both, and they've got house prices at a new record high. Now, for me, that's probably neither here nor there. If house prices are a new record high, it's kind of, yeah, well, whatever. But it does. I think the interesting thing is that it does match up with the shape of the economy, and so that's probably the interesting story for me, as opposed to you'd take a market like Auckland, peak to trough, it might still be sitting 24-25% below the peak. Wellington's somewhere around there as well. So big regional divergences in terms of how things have played out in the last 4 or 5 years, and again, that's shape of the economy too. You look at services, retail, and these sorts of things. So interesting contrasts. And Invercargill, that's and that came through on last week's podcast as well. So probably worth a listen.
Yeah, no, for sure. Yeah, I think that's the contrast for me, right? Like you said, Wellington, 26% down on peak, and Invercargill at new peak. Like, that's a big difference, right? And also, I think, there's other strong agriculture industries or centres in the North Island that haven't seen that same necessary growth either. So it's not about just because of that. There's other factors that are influencing this as well. And so I think it's worth acknowledging that. I look at somewhere, what's a good one? New Plymouth. Another good, strong economic agricultural industry, yet values are still 6.5% down from peak. So certainly better than the likes of a Wellington and Auckland, but not quite as strong as the likes of Invercargill or parts of the Canterbury region as well. So, yeah, it's not like it's just one-way traffic for any agricultural industry either, or centre, but certainly one of the factors alongside tourism, like you mentioned. But there'll be other factors that'll be influencing that as well, whether it's, affordability pressures in some of those areas, other economies, whether it's, I don't know, maybe it's the energy side of things for Taranaki, not sure. But yeah, anyway, lots of deep involvement there. Do go read the release and agree, go listen to that podcast as well. Good little 45 odd minutes with a couple of guys from Dunedin. Yeah, really worthwhile conversation. So yeah, that was really good. And I suppose the second half of this chat anyway, Kelvin, is probably mostly in tune with what we're talking about. I want to talk about the filled jobs data for June, which came out last week, and kind of nice timing in anticipation of the official labour market data for Q2, which is out this Wednesday. So, I suppose you can talk about the, filled jobs was slightly up compared to May, but then expectation of what we might see from a unemployment perspective when the labour market stats come out this week. And also I think it might be worth touching on the business and consumer confidence data, which came out from ANZ last week, which was surprisingly strong, I suppose. Yeah, do you want to give us the run through of those numbers, mate, and I suppose wrap that into a broad economic sort of health check for where things are at the moment?
Yeah. So, filled jobs. This is a monthly indicator from Stats NZ, up 0.1% in June. So, not a major change, but better than a fall. And so, and the thing with these numbers, they do get revised. So, I think May's number was originally at plus 0.3%, and that then got revised down to I think plus 0.1 or something. So, that initial plus 0.1 we've got for June could well be revised negative potentially. But for now, you take it at face value and say, okay, yep, there might not be a lot of jobs growth, but at least they're not falling. So, and I think that's something we've seen really for the past couple of years, that there's this sense that, there's economic uncertainty, but firms want to hang on to their workers if they can, because a recovery is going to come at some point, and you don't necessarily want to then have to scramble around for staff. You try and sort of hoard labour, I guess, for as long as you can. And so that's why people talk about the labour market being a lagging indicator, because people hoard labour, then they, in a recovery, even when GDP is recovering, for example, hiring might take a while to pick up because firms have already got the stuff. So, there's that sort of element going on here. So I think we've probably seen that for a while, is that actually employment's been relatively steady, relatively resilient, given everything that's been going on. But the unemployment rate has still gone up because we've got more workers. There's population growth. There's people migrating to New Zealand. There's people coming into the labour force because they've finished school or finished university or whatever. So yeah, that's kind of been the dynamic. Is we've had a higher unemployment rate, but it's not necessarily because of job losses. It's because of a bigger labour force, and that's had implications for the housing market. We've talked about mortgage sales and non-performing loans and the lack of those things. It's, yes, you see the unemployment rate go up, but that's potentially come from people who wouldn't have had a mortgage anyway. So actually the people that have already been in the housing market, already been in work, have sort of been insulated to some degree. So it's probably limited that pass through to non-performing loans and all of that. Yeah, it's been those new people coming into the labour force who might have want to get a job. Obviously, that could have enabled them to get a mortgage, have perhaps been struggling a little bit. So, yeah, that's a bit of a different angle on things. But long story short, we saw a little bit of jobs growth in June, I should say. Definitely not strong, but part of that wider story of relatively flat employment, I guess. Yeah, not a lot of sign of wage growth yet. The unemployment rate is still above normal, so we're just sort of in this holding pattern, I guess, with lots of things: housing market indicators, labour market indicators. So yeah, I think probably just a continuation of recent trends for that labour market stuff, that filled job stuff. That's monthly, of course. As you said, we've got the benchmark sort of quarterly official labour market figures from Stats NZ this week. Probably expect all of those things I've really just talked about, and that across that broader quarterly indicator, most of the expectations are that we'll have pretty flat employment. So the jobs numbers staying pretty steady, but we may well see the unemployment rate edge up a little bit because of a bigger labour force. So the expectations seem to be we might go from about 5.3% unemployment to 5.5%. But not necessarily because of job losses, as I say, more about because you've got a bigger labour force, either through just simply there's more people in the country, and or you have more of those people participating in the labour force. So they're actually available and willing to work. So yeah, it's a market, I guess, that's probably, if you can call it this, it's sort of in favour of employers at the moment and not necessarily in favour of employees. So, wage growth's still pretty subdued. You're probably happy to have a job. You're not necessarily asking for much wage growth. You're simply happy to have a wage at all is probably the situation we're in. So, yeah, that whole kind of second round thing that the Reserve Bank's concerned about, it's probably not necessarily evident there in terms of people asking for dramatically higher wages, but just because it's not there now doesn't mean it won't be there, and that's what the Reserve Bank's obviously really concerned about, is kind of getting ahead of the curve on that. And so even if we're not really seeing a lot of wage growth now, a lot of second round inflation pressures, they obviously want to get ahead of that. And I think really they've just decided, we need to get that OCR back towards a more neutral level, give us a sort of, normal starting point. And so that's kind of what they're doing. So yeah, those labour market figures, I expect probably continuation of what we've seen. There was a pretty good bounce back in business and consumer confidence. These ones, I suppose they can jump around a little bit from month to month. From the ANZ surveys, we saw this for July. We saw business and consumer confidence bounce up. We also saw some of those inflation type measures just tail off a little bit. So input costs, output prices, overall inflation expectations, if anything, sort of just drifted down a little bit. So you look at those numbers, a bit like filled jobs, you look at them at face value and say, great, that's good. Higher business confidence, higher consumer confidence, inflation measures looking a little bit softer, that's all good. But yeah, I guess with the confidence measures, they relate to July. If August will look just a little bit different again, because of course we've seen the peace deal break down, conflict break out again between the US and Iran. So you would wonder if firms, households see that and go, oh gee, yeah, maybe I won't report such a strong result for August. So, you take it at face value. It's good that we've had filled jobs, better confidence, but I guess like anything at the moment, you just have a degree of caution as well, and the old pinch of salt thing, because things can change so quickly. So yeah, probably I think we're just ticking along. I wouldn't necessarily be rushing to say we're back onto the economic upturn again. So
Yeah, I guess the question for that business consumer confidence data is, yeah, exactly when were the surveys done? When were they answered? There's a chance that it was sort of while the peace deal looked pretty good. But as you say, if it was a week or two later, then maybe things wouldn't have been so positive. And I don't want to be too, negative on it all, I guess, and writing all the positive data off is no good. But certainly, as you said, worthy to have that level of caution, skepticism, whichever you want to use, on that data as well. From an unemployment perspective, that unemployment rate, correct me if I'm wrong, but I think that would be above where the Reserve Bank's forecast was at, if it does increase to 5.5%. I mean, I'm pretty sure that their forecast was for it to stay relatively flat at 5.3%, stay there for quite a long time. Like, didn't really see any improvement in that number for a decent period of time. But I don't think they had an increase coming further. They thought it had already peaked. So I just wonder what influence that might have if it does show it's a weaker labour market that's going to flow through to a weaker economy as well. And importantly, likely less upward pressure on inflation too. So, I know that we do this every time and maybe we're overdoing it at the moment, but, potential influence on the official cash rate decision. Is there a chance this sort of latest data does make them, pause for a moment and say, do we need that next OCR increase in September? I know there's still a month to go, but yeah, any thoughts on that, if this is above expectation and starts to worry them at all?
yeah, yeah, there's always a chance. I mean, if I think we've got it in our charts, don't we? There's a reasonably flat outlook for the unemployment rate. I'm not sure, you could probably lose a decimal point in there, or a basis point or whatever in there. They might have had it going up to 5.4, and it doesn't quite show on the chart. Not 100% sure about that. And of course, the unemployment rate can change. You can have a good rise in unemployment, I guess, in the sense
Yeah.
that you've got more people coming into the labour force, and I think that's probably what we'll have this time, is that it's not necessarily about job losses. It's a bigger population, which is not good for those people looking for a job, of course, but it probably has, I guess, if you can say this, it's slightly more positive than a rise in the unemployment rate, because jobs are being lost. So yeah, there's that kind of angle too. But yeah, I mean, if we see the unemployment rate go higher than what they're anticipating, even if it is only sort of 0.1%, that sort of thing, accompanied by I mean, if the wage figures were really weak, because that's probably what they're really keeping an eye on is those wage numbers, because that's all about, people's inflation expectations getting higher, so they're asking for more wages. That gets sort of baked in the cake and becomes systematic inflation. That's really what they're concerned about. So, yep, if you saw an unemployment rate go a little bit higher than what they thought, wage growth really weak, it would definitely something to take note of for sure. Does it change what they're going to do? Well, who knows? We probably only know, in a month's time when we get the decision. But yeah, it wouldn't be something they ignore anyway. And I think you'd probably have to have some other indicators accompanying that were weak as well. Maybe we saw the next field jobs numbers was really soft. I don't know. Maybe you get a US Iran thing resolving itself, and petrol prices fall sharply again. You'd probably need some other things, but yeah, the labour market figures in their own right are a big indicator, and definitely something the Reserve Bank wouldn't be ignoring for sure. So yeah, be an interesting release.
Yeah, no, all good. We'll look forward to that one on Wednesday. I think it is. Is it Wednesday? It's out.
Yeah, Wednesday. Yep, 10:45. Yeah.
Cool. So we'll look forward to that one on Wednesday, and then it'll obviously be on our run sheet for next Monday's podcast as well, so we can dive into the detail then and what it all means. So we'll look forward to that one. All good, mate. I think that's pretty much it for most of the economic and property market chat. I did want to touch on one comment that I picked up from Spotify this morning. And I think, it's probably just a good opportunity to talk about the fact there's always two perspectives on what's happening in the property market, right? And I think you illustrated this in the HVI release over the weekend, but picked up on by Melanie on Spotify from, I think it was last week's podcast, where she said, "I must be the only person in New Zealand willing them to put up the OCR right now. Trying to buy a house in a popular Christchurch suburb has been near on impossible these last 6 months. I will gladly pay a higher interest rate for a while if it means the competition buggers off." So I thought it was a good perspective to offer up, because it is probably, she's certainly not the only person, but maybe isn't the prevailing conversation so often. As I said, I think you mentioned it in the release anyway, and you're pretty good at saying there's always two sides to everything, and increasing house prices is good for people that own a house, not so much for those that are trying to get into the market. So yeah, I think good to get that comment, and that'll be seen by anyone that looks at the podcast through Spotify as well. So worthwhile touching on. But yeah, Kelvin, do you want to just add any extra context, add your take on this, and how you tend to talk about increasing OCRs and interest rates and increasing economy and inflation and what it all means and house prices and how we try and get that balance right? But yeah, your take on that, does that stir any thoughts off the back of that comment?
Yeah, I mean, hopefully we try and as you say, I put it in our release about how there's always two sides in the housing market. I mean, it might not be so great for the moment for property owners or sellers, but great time to be a first home buyer, someone looking to expand their investment portfolio, whatever it is. So hopefully we bring that kind of balance there. I mean, I think probably something we don't talk about as much is that but it comes up from time to time, is I suppose that balance between savers and borrowers, and obviously higher interest rates are to the detriment of borrowers, but there's a whole bunch of people out there who don't have debt, and would love to see interest rates go up because it'll increase their term deposit rates or whatever it is. So yeah, that kind of angle probably doesn't come through necessarily as much because it's not so much related to the housing market, that saving side of things. But yeah, that's a great point. I mean, there's always that balance, and hopefully we emphasise that two-sided nature of all of this as much as we can. Yeah, it's an interesting sort of insight into the Christchurch market anyway. That we talked earlier about house prices. They're not booming in Christchurch, but holding up better than other parts of the country. And this comment hints at that actually there is some competition in some parts of the country and some parts of Christchurch and other suburbs around the country. There is a bit of competition there, and in this person's case, they'd be stoked to have a little bit less competition. So yeah, it just goes to show there's never one market, is there? There's always those little local stories going on.
Exactly. And yeah, like I said, for a popular suburb that might be seeing stronger growth, and if it's growing, I think what I'd say the average was in Christchurch, 3.6% over the last year. If it's at the higher end of that because it's a more affordable or lower end suburb maybe, or popular, but maybe still an area where this person's looking to buy, there might be stronger growth than that. And if that's growing faster than your income, then yeah, it is getting more and more difficult and further away from making that purchase if you're trying to get into a market like that. So yeah, as you say, good example, and sort of wraps up that conversation from right at the start as well. So yeah, I do think it's a worthwhile one. I mean, I think that in general, because our audience in most cases are professionals involved in the housing market, whether it's through their job or personally because they own housing, I think you could probably see a tone that we often talk about increasing prices being a good thing, because for most of the people we talk to, it is. Now, is it better for New Zealand Inc. or the broader economy or, the prosperity of New Zealanders going forward? No, not necessarily. But the fact is that, yeah, mostly the people that we talk to are in the housing market to some degree, and either their job or their personal finances depend on it. And so increasing prices are generally a good thing for people that we're talking to. But yeah, absolutely not always. And certainly prospective first home buyers, happy to see prices fall and maybe not interest rates increase too much, because that also can make things difficult to squeeze that affordability number out. But, in general, if they're doing okay and there's only minor tweaks to interest rates, then I'm sure most of them are fine with it, especially knowing that, long-term interest rates are still pretty good right now, like over a long-term average. And that there's always going to be flexibility in the future, especially if you're getting a 25 or a 30-year mortgage. There's going to be that variability. And for first-home buyers, if they're, I don't know, in that age of between 25 and 35 or even close to 40, they're probably earning decent coin and, saving relatively well and can pay off the mortgage at a faster rate than maybe they have to even. We talked about the interest rate serviceability testing rates that you get hit on the podcast last week with the Dunedin guys. And, you need to satisfy those numbers too. And for those first home buyers, it's, with earning decent income and decent growth in your income in those, I don't know, first 10, 15 years of your life, that's where your increase in your income comes from too. Those things probably aren't too much of a concern. So yeah, it's definitely a different perspective and one we do try and offer up, but maybe not quite as often as the other side of the coin. So yeah, as I said, worthwhile one to talk about anyway, and glad we got the opportunity to. So thanks very much, Melanie, for making that comment on Spotify. That will pretty much do us for the economic and property market chat today, Kelvin. Anything else on your mind before we sort of, wrap up a bit of a sporting weekend? Com Games is essentially finished and NPC's kicked off, but yeah, anything else on your mind before we get into that weekend chat?
No, nothing from a professional perspective. I don't have a lot to offer on the personal perspective either, to be honest. It was a pretty quiet weekend. Yeah, bit of rugby, bit of some games highlights, not too much else. We had an incredibly cold, windy day on Saturday, so it was, mostly an inside day, and then yeah, family stuff, swimming lessons, this sort of thing. So yeah, the weekend kind of came and went a little bit, but we were just having a conversation before the podcast about sort of Christmas parties and things. So it's amazing how it might be good to have some quiet weekends now, because it's definitely going to ramp up again at some point. So yeah, not a lot else to report. It seems like the sort of performance targets have been met for Commonwealth Games medals, so that's been great. Sorry, Hobbs winning the Hundy, that was awesome. But saw the netball this morning, so yeah, it feels like it's been pretty successful games, even if maybe the profile hasn't been as high or whatever. But it seems like we've done pretty well in terms of turning expectations, and great for those individual athletes too. So yeah, take it as a win.
Yeah, I think that it definitely started off slow, but yeah, Zoe Hobbs certainly piqued my interest last week. That was probably the highlight of the week, seeing her get a 100 metre gold, like in an event that, I don't know, we just don't do well in, right? And there's plenty of good Commonwealth Games countries or Commonwealth countries that are good at the 100 metres, whether it is the Jamaicans or the English, even Australia, obviously. So yeah, to get a gold in that event is just incredible, really. And I still can't quite believe it. And it was in the rain and whatnot. So yeah, that was a highlight of whatever that morning was, Wednesday or Thursday morning last week. And like you say, good to see the Silver Ferns capped off a pretty strong last day. I think it was overnight this morning by getting the gold, and yeah, no doubt benefiting a little bit from the Jamaicans tipping up the Australians in the semi-final, which I'm sure the Silver Ferns were happy to see Jamaica up against them and not the Australians to get their first gold since 2010, I think it was. But that was obviously nice and strong, so good to see that. And yeah, as you say, I think the numbers they expected were pretty much bang on. A few unexpected ones, a few of the expected ones they would have liked to get obviously didn't come true, and that's always the way, just other athletes stepping up on the day, or in the case of the high jump, obviously, with Hamish not even jumping, so that's obviously a disappointment, but understandable. So yeah, no, I think it was good, like I say, relatively low key, ramped up a little bit. I enjoyed things like the 3x3 basketball, and I don't know, I enjoyed it. Yeah, stripped back, maybe not quite as good. Still reckon we missed things like some key sports like the triathlon, and maybe a little bit of bias there because we usually do so well in it. But yeah, it feels like this will be closer to the norm, I think, in the future, as a slightly stripped back comp games, but still worthwhile and still an incredible achievement from any of those, athletes that won golds or any medal at these games. So, whether it's in swimming or in the athletics or whatever it was, it's always a pretty cool event to see us perform so well on the international stage. So yeah, no, got to appreciate that. The other thing I wanted to mention actually was that I just saw a notification this morning pop up that Tim Payne and Tim Payne Watch, he made his debut for his Paraguayan club this morning, came off the bench for 20 odd minutes and scored a goal, and scored a ripper of a goal too. So I've already caught the highlight of that one. First time finish, sort of charging through the middle after sending his winger off on the wing. So worthwhile checking out that one. And yeah, heck of a start for him at his new club. So that's no doubt going to just push his popularity even higher to score a banger of a goal in his first game. So that was pretty impressive. And otherwise, got to get a plug for the Taniwha in, mate. NPC's underway. Just such a great competition. Decent crowds around most of the country. I saw the Stag Day down in Invercargill was like 15,000 people, and I think Te Kaha sold out for the Canterbury-Auckland game, and Northern looked like a decent crowd as well. So yeah, and high scoring games, seems to be, good weather out there, strong focus on attack, not too worried about defence, and you get some high scoring games, which is entertaining. So yeah, happy days really. Taniwha with a win, and lots of points being scored, and even it's on TVNZ too. So for those who don't even have Sky, you can catch the NPC this year, which has got to be a good thing. More exposure, and yeah, more people watching is a good thing. So yeah, plenty of sport to watch, and yeah, as I say, similar to you from a personal perspective, not too much to write home about. Good weather here in Welly, but other than sport and a bit of stuff around the house, it was pretty quiet. So yeah, we'll take that.
Yep. Same. As I say, we're joking about sort of the wind down to Christmas. When that technically starts. It's definitely not this early, but yeah, there'll be busier things ahead for the rest of the year. So good to take a quieter time now and again.
Well into the second half of the year now, and with an election 3 months away as well, that's going to come about pretty quickly now. And and I don't think elections for everybody. It gets pretty tough, just all the electioning and everything as well. So that's going to take a lot of our headspace up, I suspect, over the next few months. So yeah, you got to prepare for that as well. But no, all good, mate. We better wrap up there anyway. Don't want to drag on this chat for too long. But do want to say thanks very much for your thoughts as per usual, Kelvin. I really appreciate all of that. Just want to say thanks very much for listening. Please do get in touch with any questions or feedback. Always appreciate what's happening out there, or even just making a comment on the podcast through whichever platform you listen to, just on your experience of what's going on. Even if it's that, I can happily read those out one as well. So thanks very much to Melanie for posting that one. Well, that'll do us for today. My name is Nick. He's Kelvin. You've been listening to the New Zealand Property Market Podcast. Mā te wā.